Happy Monday, everybody, and happy spring. I hope you had a great weekend. Today is Monday, March 21st, 2022, and this is the all-important Monday market update. So you can recall that in the past few weeks, we've spoken about some lists, mostly about the headwinds on the market. I want to add a few tailwinds to the list. So let's start with this one. One of the quiet negatives was that some regulatory changes in Asia. The Chinese markets have spiked in recent days as Chinese stimulus is being spoken about. Let's add a couple more to the list. Russia and Ukraine are still talking. That's still a positive. The Western countries are coming together like we've not seen in a long time. Oil prices have stabilized, much lower than they spiked to, still high, but much lower than they spiked to a few weeks ago. The 10-2s, remember that's the difference between the 10-year Treasury yield and the 2-year Treasury yield. It has not inverted yet, though we don't see that being avoided, but it hasn't happened yet. There's plenty of offsetting news, so we'll just leave it at that. Let's jump into the recap of last week. More importantly, let's talk about what we're going to expect this week in the market. I cannot stress the importance of these 5 to 7 minutes. If you want to keep a finger on the pulse of what I'm looking at and what I'm thinking about the market and recommending, yes, you'll hear from me directly when we need to act, but if you want to know more, please watch these videos and call me with any questions. Let's jump in. Last Monday started cautiously and ended with declines of about 1/4% in the S&P 500. Overall, we had limited progress on the Russia-Ukraine front, as well as some hotter than expected inflation data. Add to that, the fuel with the idea was that we saw a COVID shutdown in China, the idea of China assisting Russia in the war in Ukraine. Asia got clobbered, down by about 3 to 5%. The Fed started to step back into everyone's conversation. The Dow ended unchanged, the NASDAQ down a bit over 2%. Tuesday was back to the other side of the boat. As you may know already, it seemed that people's perception was a change-in. So U.S. stocks opened higher, and a list of reasons. Well, let's see. Ignore the Chinese stocks getting sold off. Focus on peace talks. Oil back below 100, cooler PPI, sprinkle in some news from the ECB about future robust growth. And that was enough to take the Dow up 1.8%, NASDAQ up 2.9%, and the S&P 500 up 2.1%. Stocks did close the day just off the highs for the day. Along comes Wednesday, and the day was all about the Fed. But there was more important numbers out in the morning. Remember, I told you about it last week. The retail sales number, it was soft, but really no one cared so much. Early in the day, while everyone waited for the Fed, we had reported progress in the peace talks. Asian markets spiked as the Chinese proposed some stimulus to their markets. The Ukrainian president addressed the U.S. Congress and asked for help. And that was a reminder that although the Fed is in focus, there's still a lot going on in Europe that we need to pay attention to. As the Fed decision came out, there was a short sell-off as the Fed dots showed 7 upcoming rate hikes. That was more than what most people were expecting in the market. But as expected, the Fed raised rates by 1/4%, left the door open for more to come, and also noted that May will probably be when they address the balance sheet. As Powell took the podium for the press conference, once again, he reassured the markets. Inflation will come down, growth will keep going, and the economy will be okay. The market rallied on all this into the close. S&P 500 closed up 2.2%, Dow up 1.5%, and the NASDAQ up 3.7%. 10-year yield was 2.18, and oil was back down to 95.04. Markets extended their gains on Thursday as economic data was better. Hopes for the ceasefire continued. Recall that I mentioned that what we should probably see in the way that this should proceed is the de-escalation before you get the ceasefire. So as Thursday, Russia said that progress was being exaggerated. And then you saw Biden call Putin a war criminal. Doesn't seem like de-escalation to me, but they're still talking. Again, that's the positive. That was all the market needed to close at the best level in over a month. The S&P 500 closed up 1.23%, Dow up 1.2%, NASDAQ up 1.3%. Friday came along, President Biden spoke to the Chinese president. No big surprises. Oil prices steadied a bit. The market digested the Fed's actions and their comments. The market started off a bit heavy. U.S. intelligence mentioned the nuclear word. So in some Fed comments about some upcoming potential 50 basis point moves, we did get upbeat news from Zelensky in Ukraine. And the market ignored pretty much everything else, moved higher into the weekend. Even triple witching could not derail the up move. In fact, it actually added some buying into the close. The Dow finished the day up 0.8%, NASDAQ up over 2%, the S&P 500 up over were up 1.17%. That brought to an end an amazing positive week for the equity markets, the best since November 2020 and the post-election buying. The S&P 500 for the week up 6.2%, NASDAQ up 8.2%, and the Dow was up 5.5%. This was even more pronounced in some of the beaten up sectors. Consumer discretionary stocks were up 9%, tech was up almost 8%. Energy did give back some of the huge gains it's had this year, down 3.6%, but still up over 30% for the year. Airlines even got in on the action, up 14.5% on the week. This coming week will be a key to see how the market reacts to the last week's big moves. The economic calendar is pretty light. PMI, jobless claims, University of Michigan consumer sentiment, some housing numbers. If that'll keep you wanting more, just keep an eye on Fed speak. I would give you the list, but it'll take too much time. Just know that there are more than a dozen Fed speeches this week, including Powell speaking on Monday and Wednesday. We'll be watching all that and see if the crowd on the sell side of the boat is going to follow last week's action and put some money to work. The list I gave you as we started is not the one most people are looking at. Many asset managers are looking to sell into this strength, and we'll have to see if that fast money changes course. This, again, is a good time to look at what we've got in the accounts and make moves if they're prudent for the longer term. Please keep in touch in the coming weeks. We'll be looking to put some money to work potentially, but strategically in order to best take advantage of the recent moves in the market, both the ups and the downs. As always, this is different for everyone based on your goals. Remember, we're speaking about planning ideas again on Friday. Until then, please call me or email me with any questions. Have a great week, and we'll see you on Friday.